Good morning, everyone. Right, I'm going to get this link shared out, and then we will get started shortly. Starting a little early here. Let me get this shared out to a few places in the Discord, Telegram, and Twitter. Hello. All right, so we'll go over a few high time frame things and low time frame things. Let's get a sense of the low time frame situation here. I'm actually going to delete these for now. These are just some lines I had marked out for potential scalp longs. Always nice to have your local fibs on the chart. And would you look at that? We did just wick up into the local golden pocket. So that's when you're pulling a local fib, you're pulling left to right, high to low. You have your resistance fib, your golden pocket. We'll go on the 5-minute chart so you can see high to low. This, and we wicked up into this golden pocket with a minor rejection. It's not uncommon when you have a local fib like this above local highs to get a reaction, right? Because you're coming up and sweeping that liquidity above the highs. People have placed their short stops there. People are prepared to break out long. You have that quick wick triggering those orders, and then a local rejection. Can be a nice setup for scalping. We arguably have some local bearish absorption forming. It's not super substantial. This is an order flow. Keep in mind that these divergences do not work the same as they do with like RSI. It's a completely different idea. But it's just between these highs. We can see some absorption starting to form. We did wick through the highs, but to me that doesn't invalidate the idea. So it's just something to note as we come into the New York Open. We also have a lot of this these market orders coming into the market are longs opening. We know that because there's an increase in open interest. We see this sharp decrease in open interest with this wick, telling us that a lot of that volume at the top, you know, there's 10 million volume on this pairing, and this 5-minute candle was shorts getting stopped out as these highs were swept. Because a lot of people, as we consolidate here, are moving their stop above the most recent high. So there's liquidity there, and price wicks up, stops everyone out, grabs that liquidity. And it's not to say that this has to turn to a major rejection. Oh. People are saying the volume is low. This should be much better. I had my headset on backwards, so my microphone was behind my head. Sorry, guys. Anyways, hopefully you've got the gist of what I was saying there. But anyways, locally, we've swept some of that liquidity above these local highs. That's kind of interesting, but we'll see how things develop over the next half hour. Can I expand the chat here a little bit? There we go. Yeah, sorry about the sound there. But anyway, so we've grabbed some of this liquidity. We see some shorts being stopped out just above the local highs. So let's go back to the charts here. We have a sense of order flow, some local bearish absorption forming on a very low time frame. It's nothing crazy, but it's just something to note. We head back to the chart here. So we can kind of see we have a very clear local range. We could come in and sweep these lows into the local golden pocket. We obviously have this low. Personally, for scalping longs, I'd like to see these lows taken or these lows taken. I think both of these, I prefer these ones. Both of these would be interesting low time frame setups. You know, maybe we range here, sweep this low. I think a sweep and a reclaim of this would be a very interesting scalp long. I am long. My most recent long on Bitcoin was down here. And I'll just talk about this for a moment. So the general idea here was retracing into this local golden pocket. And we had bullish order flow coming in here. I will say I did long a little early, and I actually might just cover that in the Discord briefly, and then we'll get into high time frame ideas. So I can go to the Discord here. All right. So initially, I had the idea before we came down to that level. This was some time ago on the 4th, so 6 days ago, of longing down into this level, the middle of this channel, this golden pocket. I had it marked out and prepared as a level of interest for a long. As price came down, I longed a little early. I said I'm going to long this local swing failure, but I would like to see price come down to that target. But we had bullish absorption here. And we did eventually come down into that level, which I said I'm still long off of. And then I just made a note. You know, people often ask me if I make trading errors, and that I could argue that this is potentially was a trading error, not waiting for this level, because this is the level I had marked up out here, and I longed a little early. But anyways, made it clear that I'm just sitting in that long over Easter. I said as we consolidate support with bullish divs on Bitcoin and ETH, I'm still sitting long, but wary of liquidity grabs that might need to be reacted to. As we continue, as we come into the weekend, PA can get a little wonky with levels defended by fewer traders. Happy Easter, everyone. Anyway, so obviously price did push up. That's a nice long setup. I said I'm not shorting when we tested the highs. I said if we do break down, I'll short, but I'm going to wait. We, of course, did not break down. We broke out. And then I took a loss on a hedge short. So as we came to the daily close, I said, you know, I'm wary that we could wick through and break out here. I am going to hedge my long position short, which did get stopped out. And then I've said I'm just waiting for the New York Open, and talked about some scalp longs last night. So anyways, that's an update of where I've been the last week or so on Bitcoin. So as far as high time frame ideas go, you know, what's the bias that I have? There are some ideas here where we have a fifth wave coming in. Let me go. This is from an Elliott wave perspective. This is going to be a really messy chart because I've put a ton of fibs on this, just kind of trying to visualize a bunch of different ideas. I'll need to clean this up. There's an argument that this is maybe something like a bat harmonic. I think it's a little messy. I will clean up this chart a little bit. But we're at the 886 of this X to A, which would be the target for a bat harmonic. Let me turn this off for a second. Let's just clean up this chart a little bit. But yeah, the general idea here, and again, I'm sorry for the messy chart, would be from the lows at 15K, A, B, or sorry, 1, 2, 3, and then maybe this could be an expanded flat up into the 123.7 near the 1618, but we didn't quite tap it. And then we're coming into a fifth wave up here somewhere. And there's a lot of different ideas for extensions here. The 886 is somewhat interesting. You can see what we're rejecting from it there. We also have the idea of an expanded wave 5 or extended wave 5 up into these highs around 32K, right? I mean, I think everybody's watching that level for a potential breakout or rejection. It's worth noting that our 0618 extension from this potential structure is right aligned with that level. And the reason I'm watching this structure, let me get rid of this high time frame count. The reason I'm watching this structure is because this does quite look like a wave 4 triangle correction. And so if you have a wave 4 here, this would be a wave 5. And what comes after a wave 5? Well, typically a deeper correction. So we have like potentially a local wave 4 in this wave 5. So if this is a wave 5 from down here, then you're expecting 5 subwaves, and this could be the 4th wave. Looking at the 5th wave, there's some different targets up here. The 1-to-1 extension is kind of interesting at 36K. And I think, if I'm not mistaken, that aligns with, and I'm going to kind of crystallize some of these ideas. I think this aligns with the 618 from this high. So that'd be really interesting. The only thing I don't like about it is it's in dead space. But when we get there, if we get there, it's a level I'm going to be watching closely because of this Elliott wave idea with this local 5th wave, extended 5th wave into this 618 from this pivot high. I don't like that there's not a lot of structure on the chart here, but it's also kind of, sometimes these weird places to reject are worth watching. So I'm certainly actually, it's a level I'll have on my chart. It's a level I'll be watching how price reacts to. Where is is this point of control? No, it's way up here, but there's a high volume area here. Yeah, so structurally on the chart, I don't like this level, but I do like it from a Elliott wave and fib perspective. So let's kind of clean up the charts here and just mark out the levels that I'm interested in and talk about those a little bit. Let's just put these in a group for now. So we obviously have this major high. This is going to be a target, a major level of interest. We are at the 886 right now. This is interesting. I think, you know, playing local price action off this idea, like you might, as price reacts here and forms a range, there might be some opportunities to look for scalps. Like this might offer a nice tight invalidation scalp short if we sweep this high and reject into the New York Open. And see how price reacts, maybe hit a TP1, and then look to carry the rest as a potential swing. That's how I would play it. And then if you break out, you just get stopped out with a tight stop. And then I'd be looking to locally to long, particularly if we just break down here without sweeping this high, to long reactions off of sweeps of these local range lows. This one's of interest, but I prefer this one. It's always worth noting the 382s because those are kind of bullish continuation fibs, and so you can look for those as confluence. I quite like this one from this impulse low because it comes in right under this consolidation. So I'd be interested in a scalp long here. And I know this can be a lot to take in for newer traders having all these different ideas on different time frames. But for me, this is all structural stuff that I'm used to looking at every day. And, you know, you can play a low time frame idea into a high time frame thesis. I typically like to trade my positions in kind of different legs where I'm looking to take profits knowing I can always add. For example, you know, I shorted these sweeps of these highs, and I had a high time frame thesis for breaking down here. But as price broke down, you know, I took these longs on Bitcoin. I had these longs planned, sweeping these lows, taking some profits off the shorts, shorting again. I didn't short up here. But the target for this long was sweeping these highs. But as order flow and price action develops, you start to see some bullish signals, and you end up finding these longs as well. So for me, it's not really, I don't really like to commit too hard to saying this is a swing short. I'm holding it till 10K or 15K or 20K. I want to evaluate what's happening with price. I want to be willing to take shorts, to take longs, to take shorts, to take longs. And the same thing goes here. You know, if I find a short today, I'll be happy to lock some profits in off of it and see how the higher time frame price action starts developing, knowing I can always add to my shorts or find longs if they make sense. Someone's saying no sound, but that can't be true, right? Hopefully that's not true. I'm showing that there is sound. But it'll be, yeah, all right. Somebody said, how'd you get the long in the middle of the previous range? Well, I got it by taking it. But the general idea was, of course, that we had the middle of the range here. We had local fib confluence. And in order flow, we had bullish absorption here. So that's why I referenced at the start of the stream, is that I was referencing the bullish absorption here. I was willing to hold along here because of that. And actually, some of the higher time frame bullish ideas in order flow stopped me from shorting up here, which was the 786. And there were certainly some ideas to short there, but I wasn't as interested in shorting here. I actually thought it more likely we push up something like this here, but we didn't. But I saw that as an opportunity to look for longs still. But over the next 15 minutes, we'll flip over to, we can even do it now, to exo charts. Sometimes it's worth having these ideas on here too. So we can see since we made this low last night, CVD is increasing. You see the same thing here. It's just not in the form of a line graph. It's just you see CVD increasing. Here, let's expand this a little bit. I'll just turn these off. This is the CVD line like we were looking at Coin Analyze, but it's just overlaid over the chart. So as for me, when I'm looking at order flow, I like to always have the context of all the technical levels that I'm looking at. And when I'm looking at order flow, looking at what's actually happening, are longs opening or shorts opening, are they being absorbed or not? I like to always have the context of technical levels on hand. Hey, Scott. Scott's asking, is the Elliott wave idea of cracking back into the low still possible, 20K, for example, or is that off the table? Well, first, I want to say this, and I know you know this as a long-term member of the LATF. Anything is possible. It's never a good idea to get into the idea that something has to happen or can't happen. But to answer your question in the way that I know you're asking it, I would say that there are plenty of ideas here where we could have a bearish rejection from this area. I mean, from a structural perspective, anything in here is kind of interesting for a rejection, even from where we're at. Anything between this, the 886, you could argue some very small swing shorts with stops above these highs from here. But personally, I'm going to trade local price action with tighter invalidation. But that's not for everyone. But it's arguable if we reject from here and come back into the range that we could see that deeper rejection sweep of these lows. This 786, I guess I don't have the levels turned on here. I'll turn those on. This 786 would be quite interesting, actually. So this still comes back down into our old range point of control. So I would say I'm certainly accepting that we're breaking these highs. I'm accepting that anything can happen here. I think there's going to be, typically there's clear signs as this break develops of what's more likely. And you can find opportunities to position yourself short and position yourself long on pullbacks, get TPs off of them, and let price go either way. But yeah, I think anything in here, there's certainly some breakdowns are on the table. But if we just take all the levels off the chart, I guess that might not be completely necessary. We can see, the structural resistance here is, well, this high is a liquidity idea. And after that, beyond those fibs and the Elliott wave type ideas I shared, the structure here, I don't see this offering a lot of resistance. I think if we break and claim this high, 50K could be quite likely. Not saying we have to go straight there, but if we hold this high, something like that. But yeah, I'm tentatively, I'm not really bullish or bearish here, honestly. I think rejections could make sense. We don't even have to take this high. We could reject from this 886, or we could break out. And I think as we range here, and as some of this local price action plays out, we're going to get more clues. It's sort of like when we first pushed up into these highs, we had an initial bearish rejection, but as the week went by and the couple weeks went by, a lot more context developed here where the idea of a bigger rejection from here became much less likely as all this big bullish absorption was forming. And that's why, I was willing to, as many of you know, all the way from down here, this was a major target for swing shorts. And I took shorts, but it made sense to switch some of that bias based on what was actually happening on the charts to be looking for longs. And so, hopefully something like that happens here. Of course, anything can happen. We could literally go straight down or straight up, and you could be left scrambling. But I think when that happens and you don't find a position, it's not the end of the world. And I never, this isn't to do with what you're asking, but, our minds trick us into saying like, well, what if price just goes straight up or straight down, which can happen, but we start thinking that all the time. And so you use that to justify taking weird positions. Because you're always, it's kind of a fear mechanism, right? Well, what if price just goes straight down here? I should just enter short. I know there's not really a great setup here, or I should enter long because what if price goes straight up? Yeah, I'm really interested in something like this for just a tight invalidation short right in the New York Open. That'd be beautiful. As far as ETH goes, we're obviously testing. I have longs on ETH as well. We had a really nice reaction off this level, sweep of these lows. I think it'd be strange for ETH to reject from here. Last I checked, we did have some bullish absorption forming on ETH. Yeah, we do have some bullish absorption forming on ETH. As far as the ETH BTC pair goes, we did have a nice impulse off this level. We're coming back to retest it. which, on a high time frame isn't really a big deal. But I'm certainly, nothing here on this pairing is invalidating a high time frame bullish thesis on ETH. But be interesting if we broke this down, of course. As far as S&P futures go, this is the daily chart. I still have this idea of us pushing up here. I mean, I've had this count for a really long time. It's sort of washed around a little bit here, but I think this is still generally valid. On a lower time frame, things don't look particularly weak. It seems not out of the question that we could take these highs. Okay, so as we approach the New York Open, there's a good chance I'll be trading it. So I'll probably be kind of try to narrate what I'm doing. But just keep in mind, what the heck is happening here? Oh, that just looked weird. Keep in mind, nothing that I say here is to be construed as a signal or anything like that. I'm just sharing my perspective, what I'm personally looking at. And if you're not an experienced trader and you haven't built some of those psychological tools and have strict risk management, you're likely just going to get chopped up in this market. If you're a newer trader, it's best to take time to learn and develop your trading system. To use paper trading for that, and not be trading until you have built a solid foundation and have confidence that you can be consistent. Slowly building up your trading account. So someone asked, how do you look for bullish continuation off of 382? You can kind of, hopefully there's structural ideas like retest and flips, but what you'll notice is oftentimes in strong trends, you can get nice reactions off 382s. Even on a lower time frame here. I think anyone who's been trading, it's going to take a second to get back here. Anyone who's been trading for a while will remember this big short squeeze out of these lows. But this whole move up, this is back in 2021. I just share this because it's a great example of a really strong move off of a series of 382s. Of course, this was a slight front run. But anyways, you have this 382 impulse off of this high to low. I think even this was a 382. Or maybe it was a 382 from this impulse. Can't quite remember. But then on a higher time frame, our first pullback was into the 382. And I guess in some ways it's not hard to imagine that this was shaping up to be a stronger move. Because if I remember correctly, this happened over like the course of like 30 minutes. We had many billions of volume coming in here. But yeah, from an Elliott wave perspective, a 382 continuation looks strong. So, if you have a thesis where you are looking for a strong continuation, it's worth looking for the 382. If you have bullish absorption into the 382, that can be nice. Obviously, if there's local structure, something like this to sweep, that's a nice confluence. yeah. So anyways, I'm curious to see what happens over the next 5 minutes here. To get back to your question, Scott, it's always a challenge. Like, let's say if you're not positioned as long as you'd like to be and price is doing something like this, where you start thinking, well, can price go lower? Will I have an opportunity to load up on Bitcoin before the next bull run? And when those thoughts start getting into your head, it can start muddying your perspective on the chart. Like, this was an opportunity to get long. There's going to be future opportunities to get long no matter what happens. But we either do or we don't, right? And although there are some ideas here, personally, I don't like to sit and wait and say, I think we will get a big pullback at some time. As a trader, this is my perspective as a trader. So I'm just not going to take any longs until we come back down here. I know that's not what you're looking at, but I just know that there are lots of ideas on the charts. If you spend time preparing, you're going to be able to seize a lot of the key opportunities on the charts. And as price action develops, it all becomes more clear. I don't think there's anything particularly clear here, but there is potentially a nice setup sweeping this high for a short. And what makes it nice isn't that, I could take this trade, get short, and then immediately get stopped out, and then we dump or break out. But it's just nice, tight invalidation. All right. And for many of you in the LATF, you'll know this, but for those of you not, you'll be less familiar with this concept. But a lot of key pivot highs and lows like to come in the first 5 to 15 minutes of the New York Open, which is why it can be a nice time to look for positions. That's it. It's a nice time to trade because a lot of those pivots like to hold. And it's, of course, very possible that we just continue ranging locally here and nothing particularly interesting happens today, on a higher time frame at least. Pulling back a little bit. I'd say I lean up here to looking for shorts. But if there isn't a super clear setup, there's not necessarily a reason to jump into a position. You could make an argument for a scalp short here in the New York Open. But the thing for me is, I don't know, it's not necessarily some great idea. some trade that I feel like I can't not miss. Sometimes being comfortable missing positions is an important part of trading, so I'm not really that interested in it, but there's probably an idea there. You can see, when you talk about why I like fibs so much, we can see even the S&P futures here getting such clean reactions off these fibs. The market likes to move between key levels and key fibs on high time frames, low time frames. There's this idea that the market is fractal in nature. Yeah, personally, I wouldn't short this. There's not really any interest for me. Probably let the next 30 minutes play out and see what happens. JSTC is saying, hi Lucky, if your S&P Elliott wave count were to happen, do you think it would affect the Bitcoin price action? Certainly. Well, not certainly, but likely. There's usually a decent correlation. But, you can... Oftentimes there is a bit of lag, right? So, I mean, it could just look like Bitcoin's broken out over the weekend, essentially, because of the holidays. And then the S&P kind of follows, and Bitcoin could continue to range in the meantime. But I think using this idea for context could offer some illumination to Bitcoin maybe being likely to see continuation. But using that high time frame idea, for example, for me to look for a long here doesn't really make sense, because even if we see continuation, we could get some kind of nice range like I sort of described earlier. So I'm still going to be looking for my longs on pullbacks to support. That's my preferred method of trading. I'm not personally a big breakout trader. Someone's asking what level do I see a pullback to on the S&P. I don't know. There's some different targets. I think things could get quite bearish. There's also some ideas where we come up and we sweep this high. But how likely is that? It's hard to say. So if we do come up and take this high, I will be interested in a swing failure short. From a price action perspective, this move certainly doesn't look weak, right? Like these 4-hour candles look quite strong. But we have to recognize that the move is slowing down a little bit. We're starting to form a range. There could be some opportunities here. So I'm going to answer this question a little differently than I might. Kevin's asking, would you trade this as a one-to-one hedge or a separate position with 1R risk? Meaning risking 1 or 2% or whatever your risk profile is. How I'm going to answer this question today is this. It really does not matter what I'm doing. You need to think about what you're doing with your position. It's your risk. What are you comfortable risking? And so that's one thing I don't like. Sometimes I don't like the framing around the questions like that, because it really suggests that what I'm doing is what you should do, but you should be able to sit down and say, okay, if I'm interested in trading a setup, what am I comfortable risking to see if this trade will work? And personally, I don't think anyone should be risking beyond 1 to 2% of their portfolio or trading account on a single position. That means if your stop loss is 1% away, when your stop gets hit, you lose 1% of your account. But that aside, as far as how someone might trade a position, you really need to think about what you're comfortable risking. And I'll go a little more into this. I don't necessarily think you even have to risk 1 to 2%. Sometimes I think that should be a cap. Sometimes a setup doesn't. You just don't feel comfortable, especially as a newer trader. Maybe you've seen some success, but for some reason a setup's making you uneasy. Sometimes you just have a dollar value. You say, you know what, I'm willing to risk $20, and that could be 0.2% of your trading account, right? Whatever it is. But whatever the number is, you should be so comfortable trading that size that the outcome of the trade is irrelevant, because that's going to allow you to trade that position a lot more accurately. And you're not going to get shaken out of the position as easily when you're completely comfortable with the outcome either way. But for example, it's completely irrelevant what I'm doing. If I said, you know what, I'm going to risk 5% of my account on this setup, which I wouldn't say, but if I did, and then you're sitting there shaking, thinking, okay, I've got to risk 5% too. I'm nervous. I don't think this trade's going to work. It's like, that doesn't make any sense. You want to be trading the size and the risk profile that you're comfortable with. Still reacting here in the New York Open to this local golden pocket, which is interesting. ETH forming some local bearish absorption. Bitcoin still arguably some bearish absorption here. See how this 50-minute candle closes. Someone asking if ETH is a better long here than Bitcoin. Okay, so that's kind of a multi-layered question. Well, you shouldn't long without a technical setup. So you could say that ETH BTC is pulling back to support. So, and Bitcoin's already broken out. So maybe it makes more sense to long ETH. But that's forgetting the whole idea of having a technical setup on ETH to long. Just because ETH could technically be a better long setup than Bitcoin, they might both be a bad long setup compared to Bitcoin. But, I think for ETH, there's an argument here that would a breakout make sense? Certainly. Are there some nice tight invalidation ideas? Yeah, there's probably some scalp ideas of sweeping and reclaiming this low. You could also, oftentimes I talk about this a lot too in the Discord, is you'll start to see a clear trend line developing when price is being pushed down towards liquidity. And sometimes waiting for that trend line to break can offer a nice setup with a stop under the low. Swinging that up into the 20-30 region. And like, for example, if I long something like that on ETH, still a very nice setup. You know, it's like a 9R up into this level. It would be a continuation trade of this long, which I've taken profits on. So even though I'm adding essentially where I've taken profits, now I have sort of some new technical structure. So something like this for a breakout long on ETH might make sense, depending on the reaction we get down here. I think it's probably likely we sweep these lows. And of course, we could have a deeper retracement, right? So you just mark out your structure. If there's no reaction off these lows and we just turbo break down, it'd be interesting to look at this low. We want to be looking for fib confluences on higher time frames and lower time frames. Interesting, it's the 0.5 fib. ETH likes the 0.5 a little bit better than Bitcoin, I find. So, you know, something like this would also be a very common structure. I also talk about this a lot as well. But first setup, right? You have this impulse, and you come back down, and you retrace to the impulse low, sweep it, and then rally again. Because people who have piled in long here put their stops there. So it's a liquidity idea. I think this would be an interesting place to look for a long on ETH. Around this 1881 level, sweeping this low, waiting for the sweep and, you know, a reaction, and you just long it with tight invalidation. Can even look to TP1 up into these highs that we're consolidating at. There's still a 5R. Yeah, Kevin, I know your question was sincere. You're saying you weren't trying to copy me, just trying to just interested in what someone I'm trying to learn from would do in a situation like this. But what I want to what my point is here is it doesn't matter, right? There's no right or wrong answer. If you want to hedge your position 1-to-1, if you want to take a short with an increased risk profile, so you're actually skewed short, right? Because let's just say like the long is on a different time frame, right? So you can forget you even have it. Your long is a swing long and you're trading it, and now you're looking for a scalp short. You don't necessarily have to even consider that you're in a long position. You can just trade the scalp short completely separately with its own risk profile, and forget that you're even in the long. You can also run a hedge that you completely forget about. So you could say, you know what, I'm swing long, but I also here I want to hedge out my entire position, so I'm flat until there's some more clarity. And if we get a nice pullback and nice bullish signs, I'm going to pull my short hedge, having captured some of that profit. So say you're sitting in that hedge, and that hedge maybe doesn't even have a stop loss because it's 1-to-1, so it doesn't really matter. But then you're also going to take a short position separately, and you don't even have to think about the hedge, the long or the hedge short. You're just taking it as a separate setup. But my point is that it's important to work through that thought process, right? Of what you want to do. Do you want to have a hedge? Do you want to just take a scalp short, not thinking about the long? The hedge is really considering the long, right? When you're hedging, you're considering your long position. When you're taking something like a scalp short, I don't necessarily think it makes sense to spend a lot of time thinking about the long that you have, because the time profiles are completely different. But yeah, the reason that I kind of answered the way I did is I think sometimes it's important to just push people to take to work through that problem a little bit on their own and not even know what I'm doing. I always like how messy my charts get. One thing that often happens too is, I'll say that I'm hedging a position. And for those that don't know, a hedge basically just means, like let's just say that I'm long from here and as price is consolidating here, I say, you know what? I'm seeing some bearish things. I'm not really interested in just holding it long. I don't want to close my long, but I'm just going to hedge my position short so I have an equal long and short here. And if we have a convincing breakout here, I'll pull my hedge. So I'm giving up a little bit of profit here just to be flat. And I can always pull the hedge and just be long again. Or I can hold the hedge until there's some support and strength coming in. And then I can pull the hedge, capturing that profit on the short while protecting my long. Because sometimes when you're just long and you're just seeing price come down and you had lower time frame bearish ideas, it's nice just to take that short and hedge out your longs and capture some of that profit on the lower time frame bearish, but knowing that you don't really want to close your swing longs, or maybe your swing longs are from down here or much lower, and so you're just using those hedges to protect yourself while price ranges, capture some of that profit, and then just pull the hedge if there's a breakout. But a hedge puts you flat. Sometimes, depending on where price is, a trader might decide to hedge out over the weekend. Is altcoin season canceled or still possible? I think it's anything's possible. Is it? I honestly, I'm not a big fan of boiling down market conditions to something like altcoin season, because what does that really mean? I like looking at individual setups. I only shared this idea in the Ape chat room. I didn't actually share it in the updates channel in the Discord, but as price was coming down here, I thought it was interesting on the daily chart to come down and sweep this low into the 786 and look for a long here. And the point that I'm sharing this is on ARB, by the way, is I'm not thinking, is it altcoin season? I'm just thinking this is a nice technical setup. I don't really care if there's an altcoin season or if it's possible. I'm just going to trade technical price action. Certainly there's ideas with Bitcoin dominance at resistance that alts could perform well. I'm getting some exposure to that anyways, right? I'm looking for ETH longs, but it's all technical setups. And the things that I would use to determine whether or not I'm going to long or short, like things like order flow and liquidity ideas and technical ideas, usually will get me on the right side of something like a big altcoin season. For example, I got a really nice long on XRP from the bottom of a big move, and that was all a technical thing. And I prefer to have my longs from the lows, right? So this was the long I took on XRP before this 70% move up. And down here, this was a really clean technical idea longing right here. So anyways, the point is, talking about altcoin season, now everybody's thinking like, oh, should I long XRP? It's going to the moon. But I'm thinking about longing XRP way down here. And I don't particularly want to spend all my time thinking about XRP now after a 70% move. I like to put in the work, find the setups before they happen. So anyways, that said, certainly ideas where alts could start performing really well. I have high time frame bullish ideas on ETH, so I'm looking for those longs. But yeah, it's I think I don't know if I'm explaining this well, but I think what happens is if you're not careful about how you answer questions, you sort of get trapped in this paradigm that you don't even really use or believe in just because of Twitter. So people talk about things like altcoin season and this and that. And so you get asked these questions framed in a certain way, and then you can find yourself answering the question as if it's something you even think about, where it's not. I know that you'll see people say like, now's the time to load up on alts or shitcoins or this or that because altcoin season it's around the corner. And it's like, so people have that in their psyche and that's what they're thinking. But that's not something I even think about. So I look for technical setups and someone says, do you still learn, like watch videos of other traders, read books, or just trade and learn from your trading style? Yeah, I think I definitely still learn. I'm very careful about adding new concepts to my style of trading because, without tooting my own horn, I'm very accurate and I trade very well. And it's not uncommon for me to catch the tops and bottoms of most of the assets that I'm trading. And so that said, I think there's always things to learn. I sometimes I've come across recently and people have been sharing in the Discord interesting concepts around order flow that I'm interested in looking more at and testing. But I'm not at a stage in my trading career where I'm looking to constantly be adding new ideas to the way I trade, because I'm quite comfortable and confident in the way I trade. And of course, there's always increased edges to be had. But I think as a newer trader, a lot of times you're always searching for some, and oftentimes it comes with a loss, right? You take a series of losses, maybe 2, 3 in a row, 4 in a row, and you start thinking, I need to change everything. This is not working. And so you're looking for some magic answer. But oftentimes it can be also user error or not even understanding your system and what the expected outcome should be when you're trading it. And people don't know. They also don't understand the laws around probabilities when they're taking 100 trades that they're guaranteed to go on those loss streaks. Like statistically, it's an impossibility that they don't over a large enough set of trades. So anyways, that said, I'm not constantly seeking new ideas to add to my system, but I'm certainly I love trading. I love technical analysis, and so I'm interested in it, right? So I love learning more about it. All right, so we're coming into the first hour of the first half hour of the New York Open. And if we sweep this high and reject, I'm likely going to short it. Again, that is not any type of advice. And this is what I always make clear in the Discord. I'm explaining and sharing what I'm doing and why. Giving context for some of these ideas and technical setups in the on live charts, because I think it's it's one thing to go back and look at all these setups and be like, look, this could have been a nice short. This could have been a nice long. Look at all these technical confluences. It's another thing to actually be taking the position live and saying, hey, I am long here. And this looks great now, but it doesn't look so great at the time, right? And like the setup I shared on Twitter where I said, you know, as price was consolidating here, I'm looking for this sweep into this level for a long setup. It all looks great now, and if you were to do a video saying today, look, this was a great setup, it's a lot different when it's happening. It doesn't look so great. It doesn't look like such an easy trade to take. So anyways, I think there's a lot of value in actually expressing that you're taking the position on a live chart. I love educational value. Okay, can we just get out of this? So, you know, in the context of what I was saying with ETH, you could consider this idea as a bit of a breakout long idea with pretty tight invalidation. I don't think it's unreasonable at all. But just understanding that, you know, you always have to use risk management. And there's no guarantees. Like, what's the odds of this trade working? Who knows? Could be 50%, could be 30%. But from an order flow context, I'll just share the ETH order flow really quick. The idea here would be that as we consolidate under the highs and we have this first minor pullback, we actually do have bullish absorption between these lows on a lower time frame. This is the 15-minute chart. And so what this means is that there's aggressive selling pressure coming into ETH right now. Market selling. This is market selling. So this is both shorts opening and longs being stopped out, which are at market. But what we see is there's this divergence means that there's traders sitting here with limit orders absorbing this selling pressure, typically bigger traders. And why might they be looking to do that? Well, to essentially squeeze out this selling pressure. But there's a couple things worth noting. One is I find ETH doesn't like to fake out trend lines as much, but you could also see something like this, and this could still be an interesting long setup even if this one doesn't work. But yeah. I think it's unlikely on ETH that at some point in the future, and this is really where I'm trying to target all of my longs, the ones from here as well, although I'm taking profits and I'm willing to add and whatever, is I don't think it's unreasonable to think that we should take this high. But you know, sometimes it's nice. Like I consider this is a really low time frame idea. This is not like it would, for example, to use the term bread and butter, this is not a bread and butter setup to me on ETH. It's a reasonable idea, a reasonable low time frame breakout. But this would be more like a bread and butter setup. I personally like the style of trading the higher time frame ideas, where I'm more likely just to be able to sit in a position for a few days and get a really nice move, and not some of this low time frame price action. This would be a very clean setup for me if we got it. And it's not necessarily to predict that we will get it. It's just if we get it, I'd be interested in trading it. And that's typically what I'm doing on the charts. I'm marking out ideas that if we get them, I'm interested in trading, both long and short. And the nature of price usually means that eventually price is either going to go up or down, and you're going to get the long or short setup that you really like if you're patient. And so sometimes it's nice, you know, even if you're playing with profits here, right? You're in a long, it's deep in profits, you've taken profits, you're looking to add. Sometimes it's nice not to constantly be looking for the low time frame setups, but anyways, just saying that I'm not saying this is some great idea, but it is a idea, and something I would try trading without much hesitation. Someone said, how do you mark your take profit levels? Well, like for example, here on ETH, we had this pivot high and this 786 that we were getting a reaction at, and I decided just to take profits there. But it's a level I was watching from much earlier. So let me go quickly to the Discord here. So this is when we were at the lows. All right. Again, so this was on the 7th, so like 4 days ago. This is when we were at the lows, and I took this initial long, and I said, you know, the two levels I'm watching to the upside were this 786. This is where I've taken profits now on this setup. I just marked out the levels I was interested in, and it's based on structure, key fibs, all that stuff. But then anyways, as price developed, we ended up having, like that first long was from higher than this long, but we ended up developing bearish absorption up here. So I said, you know, I'm expecting this move to the downside for another long setup. But anyways, these levels of interest were still in play based on structure and fibs. If you think about it, it's not particularly complicated. The levels you would take profits at would be similar levels that you'd be looking to short, right? So oftentimes people they think like you would use a certain percentage or something like that of a move, or certain percentage of profits. But for me, I think it makes sense just to use technical ideas. So if you have longs of interest, that's where you want to take longs. But say you're in a short, well, hey, maybe it makes sense to take profits on a short in the same regions you'd be interested in longing, or profits on your longs in the same regions you might be interested in shorting for technical reasons. It doesn't mean you have to short it, but it makes sense to have a technical reason to take profits versus a arbitrary reason. Yeah, WX is kind of saying the same thing in chat. If you're looking for TP for longs, just look for where you'd short from and see if there's a weakness there. And if you're setting limit TPs, of course you can just set them front-running technical resistance. That's great to hear, SFXQ. First, he says, first I'm sitting through a live stream for so long. Thanks for the education value you provide. Glad that you're getting something out of it. Someone asked, from where do you draw the fib for the ETH long? So I presume you're talking about this one. Well, this is just from these lows. So you have, let's go to the 30-minute chart. So we had an impulse, a high, a retracement. So from this low to this high, low to high, you have the fib there. We also had a trend line. Some confluence. I think we also tapped the descending trend line. Actually, we maybe did not. Why did I think there was a clean descending structure here? Maybe there wasn't actually. But again, you know, this is something like if members of the LATF, which stands for the Lucky Apes Trading Floor, there's a link in the description if anyone's interested in joining. They'll have become so familiar with these concepts over the months, and some of them a year plus in the group, that it almost becomes second nature to look for this sort of thing, because the market repeats these structures over and over and over again on different assets. And a lot of members are trading completely different assets. They're trading alts. Some of them are trading in traditional markets, but just using these concepts applied to their own charts. All right. So I might wrap up the live stream here pretty quickly. I'm going to answer a few more questions. I think, and I will update some of these ideas in the, certainly the members Discord, but some of the ideas I've talked about here in the public live stream, I'll update on in the public Discord as well. They're the same Discord. It's just there's role permissions when you're a member, so you see different channels. But all right. Let me read some of these questions. Someone asking if I get confused with all the markups on your chart. Seems like it takes a lot to take in simultaneously. I don't get confused. Usually when I share a chart and an idea on a certain time frame, I'll never share it with tons of different ideas. Like I would never share a chart that looks like this, for example. But when I'm charting, it doesn't confuse me. What I'm doing is I'm just looking for all the confluences. I want to know what's the extension from here? What's the extension from here? What's the extension from here? What's the trend-based extension? What's the regular fib extension? Where are my key horizontals? Where are my retracements? Where are my channels? And so I can pull all that together really quickly, chart it all up, and then I can start eliminating the things that I don't think are very confluent. I just want to know where all the levels are, especially for an Elliott wave idea. And that's something that just comes with experience. You certainly want to know exactly what you're looking for. You know, this is something I talk about, or that gets brought up. You know, a lot of people like my Elliott wave ideas, harmonic ideas, because generally I find a way to be quite accurate, although not all the ideas are correct, but I can be pretty precise predicting Elliott wave concepts. Well in advance, but part of that is because I can really visualize all that structure out ahead of time, or visualize that price action, because I'm comfortable just pulling a ton of levels at once and sort of ignoring the ones, understanding where I've pulled them all from, ignoring the ones that are irrelevant, and then I'll go back and clean up the chart before I share it. But you sort of have to be able to visualize like many ideas at the same time when you're trying to project something like a Elliott wave count. Someone's asking, will I make a short/long squeeze education video? I don't know if you're a member or not, but I think those concepts get covered in the educational content to some extent with the order flow content. As far as someone's asking if all the indicators that I use are free on TradingView. As far as TradingView goes, everything's free. I do have the pro subscription, but I can't remember if the fixed range volume profile is free or not. That's the only thing I can't remember. But I think everything is generally free. I manually chart everything. So there's free versions of the order flow tools that I use, but there are also some paid order flow tools that I use. And part of that, I don't even necessarily think you need to use those, but for educational purposes, I think there's value in breaking down some of that those tools a little deeper. Yeah. Someone says organized chaos. I love it for the charting, what I just described. And for me, it's just a matter of efficiency, right? Like if I can't pull tons of levels and evaluate them at the same time, and I have to delete everything or turn everything off and look at one thing at a time, it's just going to be so hard to go through 5 or 6 different ideas quickly. But again, it's an experience thing too. So I think it would confuse a lot of people. Someone's asking, what's the difference between the $29 USD plan and the 99? Is it $29.99 or $27.97? I guess it doesn't matter. The lower cost one is just the educational content, and you have access to some of the tools there. Sorry, some of the chat rooms, but you don't have access to live market updates. So it's just to go through the educational content to get familiar with that. You can start doing some back testing. Whereas the higher tier one it's all of that plus live market updates. I'll say this, the vast majority of members are at the higher tier, the $97 tier. So as far as the chats go and where members hang out and share all their ideas, it's infinitely more active. Like I would say even the public Discord has like 6,800 members or something like that. And the public channels are quite inactive. But the members channels, there's literally hundreds of messages every day. I mean, if not more. People are very active there. So it's an amazing community, honestly. And, I can only take so much credit for that. There's awesome people in there. Many of the people in this chat will be members there. And I really appreciate the environment everyone's created. Everyone's really, I think, on the same wavelength. Everyone's trying to accomplish similar goals, and everyone's really helpful and sharing ideas and things they're learning. So okay, I'm just going to answer one more question, and then I'm going to hop off, because this is sort of where we're coming out of the New York Open a little bit. I think over the next hour there could be some interesting setups. But the last question is, how do you journal your trades if you do? Yeah, I sort of have a bit of a hybrid journaling system with the Discord. And so what I'll say is, there was a conversation about this recently where people asked if I still plan my trades and journal them and whatever. And I just wanted to point out that, if you go through the Discord, you'll see me go through my plans days ahead of time, update them, do videos explaining the different scenarios on how I would trade those different ideas. Usually I'll answer tons of questions about those setups. And so what I want to point out is that's the work that's going into my trades, and you don't have to be producing this content from an educational perspective to be producing that kind of, in a sense, preparation for your trades, right? Like you should be planning out every aspect of your trade, marking out all your levels, writing everything down that you're going to do and what the different scenarios that you're looking for. And that's an important part of trading and journaling. So in a way, the Discord works as a de facto journal. You know, if you're producing many pieces of, you could look at it as content on your trade setups, right? I don't even think it's a bad idea, even if there's no one to watch them, for you to make a video going through exactly what you're looking for. You know, if price is up here, you're saying, hey, I'd like for price to come down and retest these range highs. I'd like to see this reaction. When price comes up to here, I'm going to long with my invalidation under here. And just for your own journaling purposes, you should really have a very thorough idea of what your plan is for a trade setup. And then afterwards, you can go through and say, hey, so I took this trade. I took it on this trigger with this invalidation. Or I took this trade early because of this reason. This was maybe a trading error, something like that. But anyways, I would suggest people take the time to really break down everything they're doing in a meaningful way, both their preparation and the outcomes. So, you know, for me, as somebody who shares essentially every aspect of every trade I take and makes a lot of content on it, I'd say the journaling is quite comprehensive. But all right, I appreciate everybody tuning in, and we will see how this move develops, and I'll maybe do some updates on ETH and Bitcoin. I would say, you know, this is all local kind of scalping ideas. A setup on ETH I'd be really interested in would be to take this impulse low. That'd be a long setup I'd be really interested in. Bitcoin sweeping this high, rejecting would be really interesting. And again, I think on Bitcoin coming down to this 382, sweeping these lows would be an interesting long setup. You know, this could be something that happens by the daily close. It could be something that happens over the next couple days. But I'm going to watch order flow as price develops here and see what kind of setups are offered. And if no setups are offered that I like, then I just won't take them. But yeah, I think this idea is still interesting on ETH.